What is happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the market. The crypto world is moving at lightning speed, and if you're not plugged in, you're missing out. We've got a packed show today with updates that could shake up your portfolio and redefine the digital asset landscape. From dramatic price swings and investor sentiment shifts to big predictions and global adoption trends, we're diving deep into the stories that matter. Let's get right into it. First up, Bitcoin is facing a critical price test, dropping below $110,000. We're seeing a fascinating mix of record futures demand and cautious sentiment from options traders, with on-chain data showing widespread distribution. What does this mean for the immediate future of BTC, and where are the key support levels to watch? Next, we're exploring the broader narrative surrounding Bitcoin's surge. With prices hitting new highs and bold predictions of $200,000 by year-end, the debate is intensifying. Is Bitcoin truly digital gold or just a speculative mirage? We'll break down the factors driving this rally, from falling interest rates and ETF approvals to global adoption trends in Asia and beyond. Plus, we'll look at why some ambitious price targets are falling by the wayside. Then, we're dissecting the immediate fallout from Bitcoin's slide below $110,000. Was this a healthy correction or the start of a deeper crisis? We'll examine the impact of bearish sentiment, Fed policy uncertainty, and significant liquidations. With key economic data on the horizon and potential shifts in monetary policy, we'll explore what could influence Bitcoin's stability in the short term. And finally, we're tracking a significant institutional shift that could reshape the market. Are major players moving their capital away from Bitcoin and towards Ethereum amid growing macro uncertainty? We'll analyze the data and discuss what this trend signifies for the future of digital assets. Don't go anywhere. Make sure to hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update on Bitcoin Bulletin. Bitcoin's critical price test. Bitcoin is currently navigating a crucial juncture, having dipped below the significant $110,000 mark. This downturn is being fueled by a confluence of factors, including substantial offloads from a large, previously dormant wallet, which has contributed to increased volatility. On-chain data paints a picture of broad distribution across various Bitcoin holder cohorts, with mid-size wallets leading the selling pressure. This widespread selling activity raises concerns about potential further price declines, with key support levels identified at $105,000 and $100,887. Despite the downward price action, the demand for Bitcoin futures has surged to record highs, indicating persistent interest from leveraged traders. However, the options market reflects a cautious investor sentiment, with put options maintaining a notable premium over calls, suggesting that many are hedging against further downside. This delicate balance between strong futures demand and bearish options sentiment creates an environment ripe for significant price movements. Analysts are closely watching the actions of holders with 101,000 BTC, as their behavior around the $105,000 level could be a deciding factor in whether Bitcoin stabilizes or continues its descent. Furthermore, historical seasonal trends suggest that August and September can be periods of weakness for Bitcoin, adding another layer of complexity to the current market dynamics. The inflows into US-listed Bitcoin ETFs have also seen a notable slowdown, contributing to the muted sentiment. While Bitcoin faces these challenges, Ethereum has shown remarkable resilience, even reaching a new record high. However, technical indicators on Ethereum suggest a potential consolidation phase. The interplay between Bitcoin's struggle and Ethereum's strength could signal a broader rotation within the crypto market, especially as macroeconomic factors and ETF flows continue to play a significant role in shaping investor decisions. The market is keenly observing whether Bitcoin can hold its ground at these critical support levels, or if the ongoing distribution will lead to a deeper correction. But what does this all mean for the average investor? Stay tuned as we break down the global debate on Bitcoin's true value and explore the predictions that have the crypto world buzzing. Digital gold or speculative mirage? Bitcoin's remarkable surge, reaching an impressive $124,500 on August 14th, has ignited a fervent global debate about its fundamental value and future trajectory. Bitwise CEO Hunter Horsley has thrown his hat into the ring with a bold prediction, forecasting Bitcoin to potentially hit $200,000 by the end of the year. This optimistic outlook is bolstered by a combination of decreasing interest rates, which weaken the US dollar and make inflation-resistant assets like Bitcoin more attractive, and the groundbreaking approval of spot Bitcoin ETFs by the SEC. These ETFs have significantly lowered the barrier to entry for a wider array of investors, including institutions. Looking further ahead, the anticipated Bitcoin halving events, which reduce the supply of new coins, are seen as crucial drivers for long-term price appreciation. The narrative of Bitcoin as a hedge against inflation and currency devaluation is gaining traction, particularly in regions experiencing economic instability. El Salvador and the Central African Republic have already adopted Bitcoin as legal tender, aiming to counter currency depreciation. On the other end of the spectrum, market analyst Fred Krueger's highly ambitious prediction of $600,000 by October, contingent on a US dollar collapse and stock market crash, remains largely unfulfilled as traditional markets show resilience. The stability of the US dollar and the continued strength of the S&P 500 near all-time highs have tempered these extreme, doomsday scenarios. In Asia, the sentiment is particularly bullish, with reports indicating that wealthy investors and family offices are significantly increasing their crypto allocations, with some now dedicating up to 5% of their portfolios to digital assets. Hong Kong's recent regulatory clarity and the approval of spot Bitcoin and Ethereum ETFs have been key catalysts for this growing interest. This trend underscores a growing perception of Bitcoin as a valuable portfolio diversifier, exhibiting a low correlation with traditional asset classes. The global adoption of Bitcoin is further propelled by its utility in economies with high inflation and weak institutions, where it serves as a vital store of value. As the digital asset space matures, events like Bitcoin Asia 2025 are set to further solidify the region's prominence in shaping the future of digital finance, highlighting the convergence of retail and institutional demand, regulatory progress, and evolving macroeconomic conditions. But as the global debate rages, has the market already priced in these bullish factors? We'll now dive into the immediate price action and explore whether a correction is underway or if a deeper crisis is brewing. Correction or deeper crisis. Bitcoin's recent descent below the $110,000 threshold has triggered intense debate within the crypto community, prompting questions about whether this marks a healthy market correction or the onset of a more significant downturn. Several factors are contributing to this bearish sentiment, including lingering uncertainty surrounding Federal Reserve monetary policy and the notable shift of capital, estimated at $11 billion from a large dormant whale towards Ethereum. This price dip was accompanied by substantial liquidations of Bitcoin long positions, amounting to $284 million, underscoring the high leverage within the market. Despite the price decline, Bitcoin futures demand has reached unprecedented levels, with open interest soaring to 762,700 BTC, indicating robust engagement from traders utilizing leveraged positions. However, the annualized premium on these futures remains at a neutral 8%, failing to breach the 10% mark that typically signals widespread bullish conviction, thus highlighting a cautious market stance. On-chain analysis reveals a concerning trend of broad distribution across all Bitcoin wallet cohorts, with mid-sized holders being the primary sellers. This synchronized selling pressure from various investor segments is weakening price stability and increasing the likelihood of further downward movement. Technical indicators, including a bearish weekly engulfing candle, reinforce this vulnerability. The critical support level at $105,000 is now under intense pressure, and a failure to hold this level could accelerate a decline towards the $100,092,000 range, areas historically significant for long-term holders. Adding to the bearish outlook are the typical seasonal weaknesses observed in August and September, often exacerbated by the ghost month period in Asia. Looking ahead, key U.S. economic data, such as second quarter GDP growth and July's core PCE inflation report, will be crucial in shaping the Federal Reserve's future policy decisions. Any indication of slower economic growth or persistent inflation could delay anticipated interest rate cuts, potentially dampening crypto market sentiment. Furthermore, geopolitical factors, including recent political decisions impacting central bank leadership, could introduce additional layers of uncertainty. Market participants remain divided, with some viewing the current price action as a temporary dip within a larger bull trend, contingent on renewed ETF inflows and a more favorable macroeconomic environment. Others, however, point to the distribution patterns and technical signals as indicators of a potential deeper correction, especially if Bitcoin cannot reclaim critical support levels. The upcoming monthly options expiry could act as a catalyst for market direction, but the prevailing cautious sentiment, evidenced by the premium on put options, suggests that bearish biases are currently dominant. But is the institutional money following the same cautious path? We're about to uncover a significant institutional shift that could be reshaping the digital asset landscape as we speak. The institutional shift uncovered. In a developing trend that could significantly alter the digital asset landscape, there are growing indications of a notable institutional shift away from Bitcoin and towards Ethereum, particularly amidst prevailing macroeconomic uncertainties. While Bitcoin has experienced price volatility and faced distribution pressures, Ethereum has demonstrated remarkable resilience, even touching new record highs. This divergence in performance is prompting a reevaluation of asset allocation strategies among institutional investors. Several factors are likely contributing to this potential rotation. Firstly, the ongoing macroeconomic uncertainty, including fluctuating interest rates and inflation concerns, often leads institutions to reassess their risk exposure. Bitcoin, despite its growing acceptance, is still perceived as a higher-risk asset compared to certain traditional investments or even Ethereum in specific market conditions. Secondly, Ethereum's ecosystem continues to expand rapidly, driven by advancements in its Layer 2 scaling solutions, the growing adoption of decentralized finance, DeFi applications, and the anticipation surrounding its future upgrades. These developments enhance Ethereum's utility and potential for growth, making it an attractive alternative for institutions seeking exposure to the broader digital asset space beyond just a store of value. The recent approval of spot Bitcoin ETFs in the US has certainly broadened access, but the performance of these ETFs and the overall sentiment towards Bitcoin can be heavily influenced by short-term market dynamics and regulatory news. In contrast, Ethereum's market performance, while also subject to broader crypto trends, appears to be driven by a combination of its technological advancements and its integral role in the burgeoning Web3 economy. Analysts are closely monitoring capital flows into and out of both Bitcoin and Ethereum products, such as ETFs and ETPs, to gauge the extent of this institutional rotation. A sustained shift could signal a maturing market where different digital assets are recognized for their unique value propositions and technological capabilities, rather than a monolithic crypto market. This trend also highlights the increasing sophistication of institutional investors, who are becoming more discerning in their digital asset selections, moving beyond the simple narrative of digital gold to embrace assets with demonstrable utility and development momentum. The implications of such a shift could be profound, potentially impacting the dominance of Bitcoin in the market capitalization and influencing the development trajectory of the entire digital asset ecosystem. As macro uncertainty persists, the strategic decisions of large institutional players will undoubtedly be a key determinant of market direction in the coming months. These are massive shifts with serious implications for your portfolio. Don't miss our rapid-fire recap and our full call to action after this short break. And that's a wrap on today's essential crypto updates. Bitcoin faced resistance below $110K amid distribution, while futures demand hit records. Bitcoin's rise sparked a global debate on its true value, with predictions ranging from $200K to $600K, fueled by ETFs and Asian investor interest. We also saw Bitcoin slide below $110K, raising questions about correction versus crisis, with Fed policy and economic data in focus. Finally, a potential institutional shift from Bitcoin to Ethereum is underway amidst macro uncertainty. If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, and hit the notification bell so you're always in the loop. Follow us on all social platforms for more real-time updates. We'll see you in the next one.